Hey everybody, we're back for another weekly Crypto Bootcamp Hangout, and today we've got Jeff Diaz with us. We've got Julian Picasso returning from last week. We've got PJ, going to try and get it right, Asaturo.
Yep.
Yeah. All right. Fantastic. Not bad. And I know we've got a few other folks who were talking about joining up, so maybe they'll be in, maybe not, but whatever. We'll see how it goes. I wanted to start off this week talking about what everybody on the group's been talking about, which is pump and dumps. We know that there's a whole shit ton of that going around right now, and my first experience with a pump and dump was on the ARN token, or Aaron. I had saw the token go up 100% in like 2 hours with wild volumes, and I was looking around for news on the token. There was nothing that was like some new thing had been delivered or there was just nothing. This token was just going nuts. And so I reached out to Brian Cribbs and I'm like, hey, what's going on with this token? He's like, stay away from it. I'm like, yeah, $50, whatever. I'll throw $50 in. And that 50 became 150 in the course of like the next 8 hours, 10 hours. Then I bounced out of it before they finished their pump and dump, and hey, I was not sad about that end result. But realistically, for most people who haven't been in the trading space for a long time or never played the OTCs or penny stocks or whatever, the whole concept of a pump and dump is kind of unfamiliar. So, as a quick catch up for anybody watching the video, the idea is that you got a bunch of traders who have a bunch of volume. They have enough holdings to make the market move if they all throw it in one direction. And so they buy to drive up the value of a stock or a token. And then at a coordinated point, whatever target they've agreed on in advance, they all simultaneously sell, which then prompts a massive panic sell-off of everyone who was buying in, and the token crashes back down through the floor. Sometimes that works, sometimes it doesn't. But I think one of the things we were wrestling with earlier was what are the moral implications of participating in a pump and dump? Julian?
I mean, I two different kinds of market taking place at the same time. One is a legitimate long-term investors market, which is the one I'm interested in, where legitimate tech has entered the scene, is going through legitimate growth, and if you're smart, you can, get in quote unquote early. But there's going to be just as much chance for that on the other side of the bust that nobody wants to talk about, when basically a lot of value drains out of crypto, but crypto's still there, just like after the dot-coms didn't go away. So that's the long-term investor's view. But then you've got this really volatile, overhyped, sentiment-driven market, where it's not really about the value of the tech at all. It's just people throwing money at stuff and trying to grow money, and there's no long-term view in that at all. I really do think that you profit from that, but missing the point of what people are developing here. It's kind of like, it's great to make a lot of money at the development of the internet, but that's not the same thing as making the internet the awesome thing that it has been for everyone. You know what I'm saying? They're just fundamentally different. And so, it's hard to be somebody that has a long view on the tech and be in a boom time and not want to like get those little quick profits that you can get off these, little coins that just pump up to nothing. But honestly, I'm in the middle of trying to figure out how to get a bot to do that. I don't, not only do I not want to pay tax for each and every one of those trades, when really my idea was to hold long, but I just don't want to spend that much time staring at my phone and at my screen, unless I'm reading something about a tech that's compelling and that it's going to actually drive, real change. So, it's kind of like both are taking place at the same time, and it's hard to talk about one without the other. But I think pump and dumps are scammy. Basically, they're like a lot of things like MLMs, where it's like, yes, you can make money that way. So I'm not going to tell you not to make money, but it's not the same as really investing in the space and understanding and supporting the space and its development, because it is a world-changing space. It will fundamentally change whole pieces of our infrastructure, like governments and central banks, as it was designed to do. It's already doing so. So, understanding that there's a fundamental difference there, I think, is key to deciding whether or not you want to jump in on pump and dumps, I mean,
I think we've seen a lot of times, when you talk about crypto with a lot of traditional developer type or traditional investor types, They're constantly referencing bubbles, and they're constantly talking about tulips. I think we've all heard tulips more times than we ever have cared to in our entire life. But there's this sort of expectation that there's no such thing as fundamentals when investing in crypto. And to me, there are some clear fundamentals. There's the strength of the team. There's the scope of the problem that they're trying to solve. There's their history of actually delivering on time, and their ability to bring a product to market. I think those are all the same kind of fundamentals that you would normally look at when looking for value indicators from a long-term investment. Those things are there. I just think not many people are well aware of it. And so, the pump and dumps do tend to hurt the market at large a bit by creating, furthering that expectation that this is all just bubble speculation versus, some carefully thought out investment into a long-term change in technology.
Mm-hmm, mm-hmm.
Yeah, and I mean, it's a really fun time to play and throw $50 bills in there like you did the other day,
Right.
and make some vacation money. But it's also a great time to kind of sit on the sidelines and read, which maybe embarrassingly is my preferred activity, and really learn about what's really happening. Because when the boom turns into its inevitable bust stage of the cycle, which is fine, none of this stuff is really going to go away. But what will go away is all of those companies that didn't have fundamentals in place, like real teams and real tech. And so if you, instead of just day trading, you can actually pick those gems out and still get them even after the bust at a really, really great price, because they're not going to go away. They're going to continue to grow. And when everybody leaves the party and they're like, oh, it's over, you'll still have another chance right then to buy the dip and get the good ones. And they'll stick around, and become Amazon, Facebook, or whatever. Everybody loves to use them as an example.
I think the biggest concern with sort of artificial inflation of the price is the fact that if it drives the price significantly up over where it should have been, and people are picking up a bunch of that, they're going to be long loss holders, and that's going to shape the sort of public perception of that token, right? Mm-hmm. Oh, well, I got in at 15 cents, and it's been at 7 cents for months now, Well, I mean, it should have never gotten to 15 cents. You should have gotten it at 7 cents if you were interested. You know what I mean?
Right.
We see that a lot. I mean, it's, real estate, right? These houses during the real estate bubble that burst back in 2008, they were up to 400, 500K when the market realistically should have had them priced around 275, 300K. If you're still in that house now, 10 years later, it is worth 400K, maybe 500K, right? But you had to wait for the market to recover an extended period of time. And if you've taken on debt at that previous price plateau, you're screwed. Right. It's a long, long time to get out of it. So there's definitely it's bad for the community when these pump and dumps happen, I think is the general expectation.
Do you think that should change how we should invest 6 months from now when there's a lot more mainstream adoption? So that's, let's say Ripple is at $10, $15, if that's possible. Should we just not throw money at some of these coins past a certain point?
Well, I mean, I don't think you're going to be able to prevent people from throwing money. And so, you can always make your personal choice. Hey, I'm not going to, participate in that to that level. But it doesn't mean that it's not going to make enough of an impact. Other people always will. You know what I mean? The two things that we always think it's worse in crypto than almost any other kind of speculative day trading is FOMO-driven buys and panic-driven sells. For me personally, I mean, the idea of putting a stop loss at less than what I paid for a token is ridiculous. I mean, I might put a stop loss at 25, 30% above what I paid for it. If it's spiked up high, I'm not sure how low it's going to, or how high it's going to go, but I still want to eke some gains out if it does fall back down. But, you got people who are people who bought into Bitcoin at 18,000, right? And then they're freaking out as it's going down to 12 and 14, and they're taking a 2,000 loss per token, just trying to get out of it in the hopes of not losing any more value. It just demonstrates a fundamental lack of understanding of cryptocurrency when you make those kinds of plays,
Yeah, I call them weak hands, and it's just because it's like they don't have enough knowledge to navigate the space, and there's so much. I don't know what there's a word for it, like froth, where it's just stuff churn. They call it churn. There's so much churn that they get freaked out by the churn. And And I kind of like, if anything, if I learned anything from buying Bitcoin in 2012, it was that there's a lot of churn in this space. You know, by luck, I got in low enough that it never dropped back down anywhere near, you know, or relatively the price I bought in at. So I was always up, you know. But like, what's interesting about what you say about stop loss, I feel the same way you do. But my father, who's like an old world, you know, financial planner and investment consultant, his whole concept of a stop loss would be setting it 25% under your buying price. And I was like, why would you ever do that? That makes no sense. But in the old, more stable market, that does make sense because you don't have the kind of insane growth that we have in Bitcoin. So you're kind of like, well, I'm just covering my ass to make sure I don't lose all my money if the company goes under. But for us, I'm kind of like, look, I'm going to be 50% up within a week, you know, but then it's going to drop 30% 2 days later. So I'm not going to set the stop loss since the volatility is so high. I'm not going to set the stop loss too close to my buy-in price, or it'll trigger accidentally when it's going to go back up, you know, but I'm still always going to set it above my buy-in price. I think that's a crypto concept, you know.
He had said that he'd lost a couple of times on stop losses, and I'm like, yeah, because you know, when you're putting a stop loss in at you know, 20% below your buy price or whatever, you might hit that in an afternoon of fluctuation in like an hour. And an hour later, it bounces out and it's like 50% up, you know?
Exactly. So it's a tricky game, you know, with stuff like that. That's why I keep saying bots. You know, the stop loss is like the prehistoric caveman level bot, where it's like, you know, you set one parameter. You're like, if the price drops under here, do this. Whereas these days, you could absolutely program like a multi-point bot that's like, if this, then do this, but then do that. And if that, then do this. And, you know, like 20 steps of if-then statements. And that's really the smarter way to handle volatility like that. Not just like desperately hovering over the sell button, you know, all day, because I'm not going to play that game. That's not a game for humans. Like there's got to be an AI for that.
Yeah.
Something, you know.
Deep brain chain.
What's that?
Deep brain chain. Just kidding.
I feel like I've heard about deep brain chain. Do you want to expand on that a little bit, even if it was a joke?
It's like, you know, it's one of the shills of the last week or two on Reddit. It's on KuCoin, and apparently, I'm not a techie guy, but apparently it uses deep AI, you know, kind of deep learning to, you know, around the blockchain technology. And I think it's one of the few AI-driven blockchain, you know, technologies out there, which is why it's been getting a lot of hype. Disney's name got attached to it at some point, whether rumored or not. So it hit a big spike. It went from, I think 2 weeks ago, I bought in at 8 cents on its like day it hit the market. And, you know, within a week or two, it went up to like 40 cents. And now it's kind of dipping back down.
See, but is it actually out there? I mean, I can buy the coin, but can I rent the bot? You know what I'm saying?
I don't.
Like,
yeah,
it's you know, that's the key for me. Like I'm not that drawn to products that I can't use. Like, why am I going to buy so much of something that I can't use? You know, unless I just want to get in there and try and buy low, sell high every single day.
I think some of us, you know, have this sort of like, I am not a day trader, right? But I do engage in some trading from time to time. Typically, y'all know it because I'll be up on the group posting about, you know, here's what I got going on or whatever. But it requires a lot of active paying attention, you know, and talking to the rest of the people involved and seeing what they're seeing and making your plays based on that, you know. So probably maybe once a week or once every 2 weeks, I'll sit down and, you know, look at where things are, make some trades up, make some trades down. But I'm definitely not like trying to live that whole everyday life. My expectation always is that unless a team is unless a team has gone defunct over time, that token's going to recover in value. You know what I mean? Tron is a perfect example of it. I got in Tron at 297, bailed at 1551. That was amazing. When it started dropping back down below 10, I started jumping back in. Now it's sitting at 7 and change, and I've got like thousands of them, but I'm perfectly fine with that because at some point in time, in the next couple of weeks, it's going to be back up over 15, 20, you know, as they start going through these releases and doing coin burns and all the rest of that. And it's, you know, somebody was hammering us in one of our hackerspace groups about, you know, well, Bitcoin's at 13 right now. What would you tell my grandma? I'd be like, I'd tell your grandma not to participate in crypto investing, first of all, because she probably doesn't know the market. But second of all, let's talk about where crypto is a week from next Saturday. Let's see if it's still at 13.9 then, you know?
Right.
And it's, you know, there's a lot of folks who expect an adjustment to try and find the floor. And I agree that with futures coming on, people are going to be testing to see where the floor is and if the current growth is sustainable. But I still see Bitcoin as that crypto dollar index, which means a hell of a lot higher value than it has right now. You know, maybe that's going to take some time. Maybe that's a slow burn, and maybe that's going to go slower now that there are some externalities affecting the total marketplace. But no, I don't think we're even anywhere close to the top.
I mean, I can't disagree. I completely feel like we're not anywhere near the top. However, slow is a completely relative term these days. You know, like what was slow in the old market and what's slow in the current crypto market aren't even comparable. Like you want, you know, like I think, you know, you're supposed to be able to pace out tech development, which is a real world activity, over the course of at least a year. Give me a year. I'm not going to write you the most revolutionary software you've ever heard of and beta tested and everything.
Right.
In like a couple of weeks, in time to race some of these pump and dumps. So you've got to give time. Like I really feel like there are a couple of landmarks, a minor one and two major ones that are probably going to happen this year that will affect Bitcoin in a very positive way. And, you know, in terms of thinking what the long view of Bitcoin's real scope is, I'm looking to those events to tell me. The tiny one is just, you know, the traders getting their bonuses, like buzz that's been going around, and that will probably get pumped into our market. And we'll probably see a little bit of growth from that. But traders are smart, so they're probably going to diversify into the alts a lot. So we'll see. That might change Bitcoin's market share. We'll see how much and how that affects Bitcoin's, you know, price. But then the Lightning Network, like pretty much everyone that's old guard with Bitcoin is banking on the Lightning Network to be the saving grace. So you can't, in terms of on-chain, it's never going to manage what we want it to do with on-chain transactions. It's always going to operate as a store of wealth. But the Lightning Network, as another layer, a parachain, gives it the capacity to do the kind of, you know, a number of transactions that it would need to be a really, you know, get back in the running, essentially, with all of the newer cryptos. So that's a major tell. And they're supposed to launch the Lightning Network, you know, Q2 of this year. So I'm definitely holding for that and to see what effect that has. And then ETFs, the mythological ETFs that one day will appear. That's when the old world investors really come in hard. There's a bunch of money that's just like sitting there drooling, waiting to get into Bitcoin that won't touch it until it's got all of the right financial protections in place. And ETFs are that. That's the one form where it's like as protected as it gets in any market. So those are the two landmarks of the year for Bitcoin's price, as far as I'm concerned. And they're both months out.
Yeah.
So you want to call that slow? That's slow, but it's happening inside of a year. That's still a lot of, you know, that'd be a busy year for Bitcoin.
Well, I mean, it's, you know, 100% growth for BTC in 2017. That is massive. There is nobody out there in the space who's like, I'm getting this on traditional instruments. You know what I mean?
Right.
And so, you know, we get used to rapid variations over the course of a day or two sometimes, you know, surrounding a media release or something along that line. And then, you know, when it's sitting there for weeks at a time with 1 or 2 pennies variance, you're like, is this thing still alive? You know, because the market is so volatile and so fast that you just get used to that constant movement, you know? Somebody told me recently, they were like, the purpose of futures is 3 things. It's to reduce risk, it's to test long-term pricing viability, and it's to provide stabilization, right? And we know that in the long term, any of these tokens, to be good as a currency, they have to stabilize. There has to be some plateau that gets hit, and then, you know, they have about as much variance as the USD normally has. Not a lot, you know?
Yeah.
And so I completely expect to see, you know, Bitcoin hit that thing. I mean, Ripple for me, that was when we talked about Ripple, that was one of the things I talk about all the time. I'm like, listen, you're going to know when it's time to sell your Ripple. It's when you've had it for 3 or 4 months and there's been less than 5% variance in the total price. That's when you're starting to hit the cap out, you know?
Mm-hmm.
It needs to be stable to be useful for what they want to do, you know?
Yeah, Ripple's another one of those contentious kind of products for me where I want to, I've got some Ripple, and I'm definitely looking to enjoy the growth as much as anyone else. But to me, philosophically, it's completely out of alignment with what crypto is all about. And that makes it hard for me to really root for Ripple. It's literally like, if you want to make it a short sentence, which obviously it's more complex than that, crypto and blockchains were invented to disrupt central banking by creating another option through decentralized finance. Ripple is not decentralized, and it is specifically for bringing the blockchain to central banking. So it's kind of like, it's like the philosophical opposite of what blockchain's supposed to be about. And so it's hard for me to root for it, even though I'm in a little bit. It's like my dad buying Monsanto stock. And he's like, my Monsanto stock is doing great. And I'm like, Monsanto? How can you feel good about profiting on that evil shit? You know? And like, so, it's like, that's kind of how I feel about Ripple. I hate to say it. I'm sure the tech is solid and the team is solid, but I don't align well with their philosophy.
I've been an open source developer for probably as long as I've been in technology. I did a little bit of enterprise development way back in the day when I worked for a massive corp. But primarily I've worked in LAMP stack and JavaScript and Python and open source languages. That being said, the presence of .NET and C# and all the rest of that in the space is good for the space, because if big corporations are using the tech, then the tech's going to stick around. You know what I mean? And so for me, seeing that there is great evolution in the .NET marketplace means that people are really going all in on this concept of applications through the web being an important thing, So that's, Ripple for me kind of fills some of those same goals. And I think that there's a couple of other tokens that are that as well, where they're intended to be like banking tokens. Like I think Cardano is one of them. Or Lumens actually might be another one, where they were like, they're trying
Stellar Lumens.
SEC regulatable, I think that's a good thing. That should be there. Now, does it really fit with the philosophy of decentralized banking and all the rest of that? No, of course not. But its presence there means that blockchain as an underlying technology, or the distributed ledger technology, is stable and mature and going to be around for the long term. Because enterprises don't shift directions quickly. If they're spending all this money investing in development in that space, they're going to stay on that for a while. I mean, their corporation's still running Windows 95. I kid you not.
No.
They don't
Seriously?
quickly.
Yeah. No, I mean, and I absolutely support the legitimizing qualities of these big banks getting in the game. Like, I'm not fundamentally against it. Like, I don't know that I'm an anarcho-capitalist, but the anarchist in me really believes it should be a free-for-all. It should stay a free-for-all, which includes all the big evil overlords. They're allowed to play in the game too. And that will legitimize parts of the game. My concern is less that it will be disruptive inside of the space of crypto. I just feel like once that's built out, the government will make it where that's the only legitimate way. And only, like right now, utility coins are not going very strong, but security coins are. And so, it's a very broad space. And if there's too much activity on one side of the space, all the laws will converge around it and say, this is the only legal way to do this. And then everything else will get pushed back onto the dark web. And all the work and all the profit will end up getting pushed onto the dark web, and it'll be very difficult to extract. So, since it's going to be very much a sentiment-driven market for the next 2 years, now it's not going to be built on fundamentals until we're past the bust. I'm trying to make sure that the sentiment stays as closely aligned with the original philosophy, because we were talking about this shit in California 5 years ago as like a way out of the problems that led to Occupy Wall Street. Exactly. And the thing about new systems is that if you don't keep clear on your driving philosophy, you end up just reiterating the last thing all over again, 2.0. It'll just be the same shit. And so there are major conversations taking place regarding governance and systems thinking and game theory, and how setting the systems up a certain way will allow for certain things and block other things. And so I'm rooting for the ones that stay a little bit towards, I mean, you know, maybe a little towards anarcho-capitalism, you know, maybe, but like, I mean, I'm not anti-capitalist. The governance side of it, it's a fascinating way of looking at this tech. Like I had a bunch of people, a guy that's speaking in front of a conference. He was invited by Forbes to speak in front of a conference in Italy, and he was talking about the socialist implications of the blockchain, or the implications for socialism. And man, the rage that came out of people, like brainwashed people that just think socialism equals evil and equals communism. And I was like, it's a lot more nuanced than that, guys. You should really unpack some of this language. Like, we're talking about the means of production controlled by the people. That is literally what mining is.
Exactly.
That's not evil. I mean, it's not that simple. And so, like, that kind of nuance is fascinating to me, and I try and keep people's minds on it, because it's going to drive the decisions of what survives and what gets regulated out of existence.
The Soviet Union ruined the perception of socialism forever when they included it as part of their name.
Yeah, no doubt. I'm Cuban. You know what I'm saying? Like, imagine how well socialism flies in Miami with the old Cubans. You know.
Of course, nobody forgets that North Korea is a republic too. You know, but they haven't let go of the republic part of ours.
Yeah. Yeah, so, you know, but I'm thinking more from a game theory, systems thinking kind of angle on this stuff, where you don't get into like philosophies and books by old wise men. You more get into like, what are the dynamics? If we're designing a system, what are the dynamics that the design will lend itself towards, and what other things will it have a chilling effect on? And so that's why I worry about centralizing and giving too much power to centralizing blockchains. Even though I absolutely agree that it's really good for stabilization and sustained growth. Like, there are philosophical underpinnings to just letting the system kind of run itself and letting it be a little bit more of a messy free-for-all and self-stabilize. There are things that enables that aren't possible any other way.
Yeah, I mean, that's
and that's, you know.
When I look at it, I look at blockchain or DLT as the same as, you know, the TCP/IP protocol, right? The toothpaste is out of the tube. They're not going to be able to put it back in, right? They're not going to be able to custom block blockchain networks from running around the world. It's just known. You've got applications that are being built now that use blockchain principles that don't have anything at all to do with currency or trade. I mean, Hashgraph is a good example of that, you know? So,
Right.
You know, the idea that the government's going to be able to shut blockchain down, I just don't really think that's got any teeth to it. Now, the idea that the government and banks are gonna lean heavily in favor of some systems which you know, they are much more capable of regulating, well, sure, absolutely. But I don't think that's, you know, it's going to be more like, you know, you got Visa and you got Amex and you got MasterCard, right? And you also got Discover, and then for a while we had Diners Club. You know, those things didn't live or die based on government regulation. They live or die based on adoption. Mm-hmm. And the reason that CC is the #1 language on the internet, despite the rampant amounts of hate thrown at it by many development communities, is because it's widely adopted. It's simple to implement, you know? And as long as you're covering those things with blockchain applications, as long as you're making it easy or building out systems to support those things, it's just a train that's not going to be stopped, you know? The genie's out of the bottle. You're not going to be able to stuff it back in.
No doubt.
Okay.
Who is this that's joined us just now? Somewhere cold. You're somewhere very cold, I can tell.
I'm in DC. I'm freezing my ass off.
I'm in Miami.
I had to go outside to smoke, man, but it's fucking cold out here.
Yeah.
It's a very comfortable 2 million degrees below zero here right now.
Well, I'm in Miami, and long sleeves feel like too much clothes right now.
Yeah.
I'm very jealous.
The weather's pretty reasonable in Tampa Bay today. I think we're in the mid-60s.
Yeah, it's just cloudy. It's no big deal.
I didn't get your name though, my friend. Are you on the boot camp with us?
Yeah. Vince.
Vince. Oh, okay.
Hi.
Welcome.
Hi, thanks, man. This is
So,
really interesting.
Yeah, we're just kind of rambling around. We didn't really set any bullet points for conversation or anything. I forgot what our point of departure was.
It's cool.
At some point in time, we might actually make an agenda of some sort, but mostly we.
I think it was pump and dumps. I think we somehow started with pumps and dumps.
Oh, yeah, we did.
What's your question?
My question I'd love to ask is to get your thoughts on, like, what are some of the top coins by the end of the year? Like, from more of a technological perspective, because I think, we're all going to say, like, I don't know, maybe like Rec or Stellar or whatever from like a popular, or Ripple from a popularity perspective. But as far as like from a tech standpoint, what do you see with maybe the biggest scale? Like I like VeChain a lot. There's like a lot of, I'm trying to figure out what's some of the best long-term holds outside of like Ethereum, Bitcoin. And that's what I'm interested in just throwing at money today. It's like, what's going to be around after the crash? Go on.
I've only got a short answer because really my answer is I don't know. We're gonna see. But I can tell you the two best performing on my portfolio and why I think they're both still going to be strong this year. One is overhyped and the other is underhyped. Cardano, ADA. I think it's going to have a great year, and I'm just only hearing positive things about it everywhere that I look, and I still don't know enough about it to speak very strongly to it, but I would say that from its performance since I got in a few months ago and just from everything I read, I think it's going to have a strong year. And then the other, I got lucky. I applied to be the community manager of Poe or Poet, right? POE. Yeah. And they answered me. I didn't get that job, but I ended up buying a bunch of their coin when it cost like nothing. And the thing is, they really could give a damn about the value of their coin. They're one of that. They have a legitimate iteration on the blockchain of a tech that's like, it's valuable. They're taking on publishing and copyright, and they're very focused on that and really not focused on how their coin is trading on the markets or hyping their coin. So they're under the radar in that respect, but I don't see them going anywhere. They've got a very strong team. Like let's put it this way. They're a blockchain-based publishing tech that was created literally by the largest publications in crypto. I don't even remember the name of the damn magazines and websites, but they're all the biggest, blogs and publishing in crypto. They pulled their team from that and created because they were already using it as a backchain in-house, as a back end for their own material. And so it's just really the right team and a solid tech. And I don't see them going anywhere or going under, or I think they're going to have a strong year.
I already made a few good trades in Poe and doubled up on it a couple of times based on the growth that it's had. I like it as a coin. I'll probably get back into it. I'm not holding any now just because the last round of gains was too appealing for me to not take advantage of. But
gotcha.
For the same reason that you like Poe is the same reason that I like Tron. I think it's dealing with some problems in Chinese media in particular, in relation to control and regulation, and allowing for a platform that, potentially helps bypass some of that, or maybe even just because it exists, helps drive policy in China to be a little bit more progressive instead of trying to fight this from a technology perspective. By the same token, I'm also, I'm also really long on Verge. I know that it's had some ups and downs, and of course, there's been a lot of FUD around it about the Wraith protocol and all the rest of that. Given the additions to the development team that we've seen from the end of December and the beginning of January, some of the roadmaps that they've hit, Wraith protocol appears to be working exactly as described. The ability for people to switch between public and private transactions and have that public and private stand up to things like chain analysis. I think that has a huge potential for people who don't want all of their transactions regulated, which I think bodes well for the long-term success of the token, And it's one of those things where no single government is going to be able to shut it down because given the decentralized nature of blockchain, you can just host nodes in countries that aren't participating with an anti-blockchain coalition, And so, whatever Silk Road 3.0 is, I would be willing to bet that a ton of that's going to be done in Verge, So to me, that for the
has anybody here
speaks to the value.
Absolutely. I'm hearing both sides. Like that's like a love or hate thing. I've noticed Verge, I've got a little, and either people have zero faith in it or they're like, no, it's solid. That's ignore the FUD, like it's one or the other. But speaking of like whatever dark web 3.0 or whatever you want to call it, has anybody or Silk Road, has anybody here used Open Bazaar? or heard of it or know anything about it?
Nope.
It was one of the early iterations, when the
Oh, you froze.
Oh no.
I've got a white box in here, so that's like big on the screen. Oh, damn it. It went away. It was just such a perfect, like,
Oh yeah.
Screenshot it, profile picture, done.
oh, yeah. That's the problem, I think, sometimes with joining from mobile. If you're not on a really strong Wi-Fi connection, you tend to bounce out.
Mm-hmm.
Now, he'll probably sync back up again. He's completely right about, Verge being love or hate. Obviously, there were a ton of folks who were just wildly unhappy with the process of development. I think that there are people who specifically drove the price down to grab a bunch of it, but I think a lot of people were legitimately like, fuck those guys, they don't know what they're doing. Yeah. And given how poor their PR was, like, they did not do a good job of communicating things at all. It was basically just that one guy for months and months and months trying to do the development and be the public face of the company and all the rest of that. That wasn't good, even though his idea was. But now that they're starting to put those things out, I'm kind of surprised we already haven't seen a significant increase in price. And that kind of leads to something else that I wanted to talk about was, holy shit, the market's been bearish for the last 4 months.
Yeah, seriously.
I think every single holding I have right now is in the red.
Yeah, I got in 2 weeks ago, so I'm completely new to this whole thing, but I got in right before the January 1st rocket ship for everything. And I was like, oh my God, this is crazy. You can double your money in 5 days. And I told all my friends about it. And they all got in 5 days ago or 3 days ago. And they're like, this is the worst thing ever. I regret all this. 2 different experiences.
You guys, it's funny. We literally watched, I think it was like Wednesday when it started, and it was literally over the course of a couple of hours, the entire market fell off like 20%. And, when you think about the fact that in 2008, right, the market dropped 13%, and that triggered mass panic.
Mm-hmm.
And this market, cryptocurrency as a whole drops 20, 25, 30, 40%. And we're just like, well, that's kind of scary, but it'll come back. It's fine. That just means we hold.
Yep.
Except for everybody who panicked and dumped everything they held.
Oh my gosh, yeah.
And we see that a lot. I mean, it's, one of the biggest things that I was concerned about with the big run up on crypto when it ran to, or on Bitcoin when it ran to 19.6. I'm like, there are a lot of people right now who are buying at 18.5, 19, 19.5, 19.6.
Sure.
This is an all-time high spike. That is not the time to be like mortgaging your house. Like, I gotta get in on this now. No. So somebody asked me when the best time to buy Bitcoin was. I said a year ago. Always a year ago.
Yeah.
And it worries me that FOMO drives so much of the buying activity around these tokens because it really isn't sustainable, and it ends up getting a lot of people who don't know what's going on burnt,
Yeah. I don't think I've ever seen a coin rise if it doesn't fall by maybe 20% in the next couple of days. Like, it just makes me realize I should never ever buy, because nothing runs from like $1 to $30 in a day. People buy into these like crazy quick spikes.
Yeah, I mean, it's, one of the things when I was reading some of the Forex trading stuff, because the models are pretty close to the same between Forex and crypto trading, but one of the things that I was reading is some of us tend to... Woo. Hello, Jason. One of the things that I was reading was, that we tend to do it wrong, right? We buy it when it's going down because we're like, ooh, it's getting cheaper. I'm going to buy some now, and then it's going to come back up. But, one of the fundamentals that they said that they use in currency trading is that they start selling as soon as it's clear that a downward trend is becoming established, right? So not on its way up, but after it turns. And that means that you never get the dead peak, but for sure it's starting to fall off, so you get your gains at that point. And buying the same way, you don't buy it on the way down. You wait for it to bottom out and turn back up.
Smart.
And then maybe you only get a short gain. Maybe you get a big gain, whatever. Who knows? But, you know, just make sure you're buying on the trend. And that's not what we're seeing.
That's smart.
People across the market are buying at all-time highs, like, regularly.
Yeah. Yeah, I was talking to one trader, and he says you always buy into the meat of the sell and meat of the buy. You're going to get on maybe 80%. You're never going to get on that perfect, like, pivot moments.
Well, I think part of what like set my expectations wrong up front was I almost nailed it dead perfect on Ethereum. I caught the dip. What the hell? What are you doing? Reject. God damn it.
What was that?
That was Julian trying to dial back in, except he didn't know how to fire off the right session, since this isn't connected to the online chat that stays live.
Oh.
That should hopefully get him back in.
Oh.
Maybe.
I got a question.
Here. Oh, hey, there's an actual Jason. Looking like Rambo or something.
Seriously.
It's Sniper. My wife is sleeping. I have to sneak into the crypto community. Do not wake my wife. She doesn't believe in crypto. I'd be better off watching porn right now than sneaking into this.
It was funny, Gabe Aloisi, who's in the group as well. I was hanging out with him and his wife last night, and she comes up to me and she's like, "Now I know who my husband is texting after midnight." And he came by, he was laughing. He's like, "Yeah, she thought I was like cheating on her or something because I'm having all these text messages late at night, And he's like, "Look, it's Chris. It's Chris."
That's great.
He's also an interesting dude. That's it's one of the things that I like the best about crypto. I think is that it kind of identifies all the nerds in our community that we didn't necessarily know were nerds at the time. You're talking about the topic, and you get people who pop up, and they're like, "Oh my god, I'm totally into that. Here's what I'm holding. Here's what I'm trading. Here's what I'm doing." And as soon as it's like you see each other from across the room, you're like, "Drawn."
Nice.
So you died, I think, somewhere when you were talking about the coins you were long on, Julian.
Oh no, I wasn't talking about coins I was long on at all. You were talking about the Silk Road, and shortly after the Silk Road was shut down or whatever, they tried to create a legitimate online marketplace, that was like, I don't know, it was called Open Bazaar, and I've downloaded several iterations of it, but it just seems really cheesy, really took, and I just was wondering if anybody else ever used it or cared, or whether
the weed you get from there is terrible.
Yeah, I know, that's why I don't use this machine. But don't worry about it. It was an afterthought on another topic. Don't even sweat it.
I think that there's when we look at who can be a massive disruptor in the crypto space, I think one of the obvious targets for who that could be is Amazon, right? You've already got the single largest retailer platform in the world. If they started saying, "Hey, we're going to accept a number of tokens," the tokens that they accept instantly spike in value.
Absolutely.
Because then you start getting active retail trading on the world's largest platform, and
yeah.
That's one of the reasons why I'm so excited about one of the products that we're working on, the Pocket Network, because of the fact that it provides a simple relay network that allows just about anybody to use crypto for point of sale easily in an app. All you have to do is include the library in your build manifest and reference the objects from the library, and then any supported token, which I think the vast majority are ERC tokens, but any supported token can be easily used from whatever wallets you've got installed on your mobile device. I think things like that are going to be what help drive widespread adoption long term. When people can actually look at, if you gave I saw your message there, Jason. If you gave people incentives to pay in crypto versus paying in other forms of currency, you know, I think that's a quick way to get more people involved. You know, hey, want a 15% discount on your first purchase? Install the I Do wallet and get, you know, 56 Lumen and pay that way, or whatever, you know, whatever the case, right? Lend or Salt or whatever the token of choice that you're trying to stack up on. So relay networks like that, I think, are going to be super important. But the massive players in the space, the Amazons, the Googles, Facebook, even, you know, if they lend their weight to this, if they start making plays in the crypto market, there's no way in hell that the rest of us are going to be able to keep up with the kind of influence that they're capable of wielding, you know?
I feel like the kind of mainstream adoption you're talking about is inevitable, but I feel like it's going to come after the bust. Meaning that I think Amazon's not stupid. Amazon has known that the whole crypto community has been buzzing for their involvement forever. And they know that they could literally corner the largest growing market in the world. But then they would have to take the ride through the bust with all of us.
Yeah.
They're like, you know, why don't you do that in your personal portfolio? And as soon as this levels out, we'll step in with a really intelligent play. And they probably got that play sitting there already in their offices, ready to go. But there's so much churn. They could sink their ship. I mean, I don't know that they'd sink Amazon, but they could mess themselves up pretty bad. You know, it has to be a carefully timed play, and I think that's why you see so much resistance, which is why Overstock is trying so hard to step up in their place. That it's been like a, you know, second run and also ran for so long that they know, they're like, this is our time. You know,
they just need to make sure they understand the difference between Bitcoin and Bitcoin Cash.
Oh, we missed out, man. We missed out.
That would have been the quick way to double up right there. All right, we're now coming close to the end of our time. So I know Jason, Jason, you said that you had some noob questions. So why don't you jump in and give us your noob questions?
Awesome. Okay, here we go. All right, Kodak coin, right? We just saw that come out real recently. So I'm thinking, you know, I'm thinking about like this. What I've been thinking about a lot lately is the currency versus utility. The hell with currency, right? Up, down, trade this, trade that, make a bunch of money. Fine. Let you guys have your fun over there. As a developer or as a owner of a dev company, I'm thinking about all the corporate clients that I have, and they come up with this idea, right? Because how many times have we heard that the blockchain is the internet of 2020, right? What the internet was back in 95, blockchain is now. We've heard this all, right? So now a company like Kodak comes out and they say, hey, let's figure out how to use blockchain to bring our company back into like the mainstream and make a really, you know, get back on the radar of everybody. So the CEO of Kodak goes and says, okay, guys, your assignment is figure out how to use blockchain and make us a bunch of money. Sure enough, their shares go up 73%. Well, between the time that Kodak coin came out and when the CEO said, hey, let's figure out how to use blockchain and come up with this idea, somewhere in there, they had to come up with lawyers. They had to come up with developers. They had to come up with, so where did they go? Where did all these people go to be able to figure out how to build a coin, to launch an ICO? So if I'm a developer for a company, to hell with building web apps, to hell with building mobile apps, I want my corporate accounts come to me and say, hey, I want to start using blockchain. Where do I go? What do I do? That's my noob question.
I mean, that's not a noob question at all.
That's one of the things that we're actually doing right now is setting up contract blockchain development. You know, people who want an ERC20 contract and want a front end to interact with it. You know, that's one of the places where I'm chipping out some value in the market. In fact, more value out of that than out of trading. You know, trading's nice. I can turn 50 into 150, and you know, my small cap plays have grown pretty nicely over time. But you know, at the end of the day, none of that compares to billing dev rate to build out an application. That's fast money. You know, that's my money in a week with a couple of zeros extra attached, far more than I made on blockchain trading.
So let me stop it, Chris. Where would I go? Okay, so I got a corporate account, and they say we've got to figure out this blockchain. We got to figure out now. We're going to throw some money at you, and your job is to go and research and find us a way to use blockchain for my company. Where do I start?
Well, I mean, selfishly, I'd say call me, but
Of course.
you know, probably, you know, searching along the lines of blockchain contract development is a good start for that. You know, There are a limited number of people. That's part of the reason why I'm trying to facilitate blockchain development deals now, because I think there's a limited arc to that. One of the things that industry does as a technology grows is works to commoditize development of that particular framework, because it drives the price of development down. When you only have a handful of people that have the expertise to pull it off, like Solidity development right now, that means we get to charge premium rates. So for my little side development gigs here and there, ERC20 contracts are my preferred development side gigs right now, because we can charge out the ass for them. And hey, who else are you going to go to? That question right now it has a slim answer. If you don't know somebody developing in the space, you're kind of left to Google to try and find some freelance companies, and then you have no idea what you're getting. The actual skill set is wildly limited in the development ecosystem. But in 18 months, 24 months, that's not going to be the case. Yeah, I mean, we're training Solidity developers right now. They're going to go on and train other Solidity developers. People are going to put together classes around Solidity development and get it out there. That's just part of what an emerging development environment looks like. I'm so hyped to get it going or make money on that now, because I know there's a short shelf life for these skills being rare.
I mean, I guess I have a completely different perspective on that. As a non-coder, I don't have like 3 businesses, and writing code. You can write blockchains, as far as I can tell, in many different languages. And there are people creating their own whole protocols, that are like the Tangle and the Hashgraph, based on just the concept of it, where it's a decentralized encrypted ledger, or even a centralized encrypted ledger, which is another variation on the same theme. So in that sense, a quick Google search will show you what languages you can write a blockchain in, and it's very familiar territory there. It's a lot of familiar languages with a lot of really strong development communities out there. So if I was looking for, like, who can do this work for me, and I'm looking for talent and vetting talent, I mean, just this week alone, I'm going to the North American Bitcoin Conference, which is $1,000 a ticket, but there will be lots of developers there, and I could find talent there. And then I'm following that this weekend with a Bitcoin hackathon at a local co-working space, which is the 4th or 5th in a row that they've done. So there are strong communities of people out there that do have a history, writing in very familiar languages, this less familiar protocol or, style of structuring information. So, so it's not a shot in the dark. You know what I'm saying? It's not like you're coming out of nowhere here. It's just that it's a new enough technology that mainstream adoption is not that high. And so finding people that have already written a few, that are out there and launched, that's a little harder, but but it's not out of the question.
I mean, part of it probably comes down to how much experience do you have as a software development project manager? Because if you've got a lot of experience as a software development project manager, you're probably going to be familiar with, sort of some of the architectural requirements, some of the organizational requirements. It's going to be a lot easier for you to turn up a new blockchain product than somebody who's just like, oh my God, I just took a tutorial on blockchain, now I'm going to build an organization around it, the business considerations remain the same. So, I mean, I think you would actually be well leveraged to pursue that. But there are some specifics. I mean, one of the things that we look at is, I know a lot of people who are writing ERC20 contracts, but they have very limited experience with standard web applications for the front ends. And that's where those projects start breaking down. They've written half dozen contracts and published them out on the blockchain, and they got all these things going, and they can eloquently tell you the difference between proof of work and proof of stake and proof of time, proof of location. But, they don't know how to structure an RDBMS model. And their application, which has full read and write to their contract blockchain application, gets hacked in a day because they don't know how to escape inputs. So there's a high level of savvy required to run those kinds of projects. But again, like he's saying, there are a lot of options out there for how to write contracts. So maybe the skill set isn't as narrow as it seems from my point of view. That being said, I'm still going to charge a premium rate for the next 2 to 3 years.
Like 50, absolutely. Like 50, 60 an hour or something like that, Chris?
Cost adjusted for the Ukrainian market, maybe.
I tell you what, these boys probably got it figured out. I got to find them. If I could only learn their language, then anyway.
Yeah, I mean, it's, most of our development stuff, from an agency perspective, we tend to run between 125 to 175 an hour for development based on the project. And, for blockchain projects, especially if there's like compliance or if they need to go through SEC stuff, it depends really on what the specs are, right?
Right. So quite seriously though, it's not impossible to find companies then that are actually writing code, can help you figure out, look, my company's like very seriously, I've got a couple accounts and they have looked at me and said, look, blockchain is definitely making a big noise. I look to you to help us get into the space, do some research, figure it out. And that's where my question came from.
I mean, one of the first things that I think most people, like one of the first steps that most people seem to miss when they get all hot and bothered for a blockchain app is use case analysis. You know what I mean? I've worked with a couple of different like major industry coalitions for like insurance carriers and things along that line. And they're like, we are blockchain focused in 2020, blah, 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 blah. And then you go read their white papers and it's like, we're performing use case analysis across these segments, which means they still don't even know. They're like, I've got this big ass hammer. Where are some nails? So I would say as a project manager, as a development team runner, really what you should be focused on is getting savvy and understanding is if there is a reasonable use case for them to use blockchain. If it's like, we're going to replace our email with a blockchain communications product, that's probably not the thing to do.
Well, I know there's a lot of folks here that probably were more concerned or probably hear more for the currency side of things than the utility side of things. So I didn't mean to digress the thing. Let's jump back to currency. And I can very excitingly say I finally got into Coinbase today. And I finally invested my first $50 and bought some Ethereum, but I've got to wait my 8 days, so I am that far behind everybody else. So
no, I mean, don't feel like the race to the candlestick charts is where all the action is in this space at all. Like that's where the churn is, but that's the real long action is on the development side, and so you're absolutely well positioned. And I mean, if you think about it in terms of structured information, there isn't that hell of a lot of difference between these three things. One, which is less familiar, and two, which are more familiar. A ledger, right? And then a database and a spreadsheet. They all have certain things in common, that they're ways of structuring information. What we're dealing with here is just encrypted ledgers, which gives it adds an order of magnitude of complexity, and then the tokenization of that adds another, and that's where it like blows everybody's mind, and they're like, whoa. But it's because it creates the capacity for what the blockchain is, which is a way to not have a trusted third party, and that whole thing. I'm not going to drag you into that. So there's a lot that's still very familiar about this space once you can decode some of the new language for this specific iteration of tech. But remember, it's built by standing on the shoulders of giants. Spreadsheets and databases were doing this work in a less encrypted way for a long time. And if you've been managing that kind of thing, you can get your head around what you're building and pull together a team to build it. It just becomes language specific and protocol specific from there.
And to second Julian, the utility is 100 times more interesting to me than the currency side. Like I said, I trade for fun. The utility is the important part to me. When I look at the future of Symphony over the next 3 to 5 years, the primary company that I help run, we are doing a lot of work in the healthcare development space. We have a lot of HIPAA compliant folks. We understand government regulation and the stuff around that. And there's a strong need, and has been a strong need in the healthcare space for quality EMR solutions and ERP solutions across huge enterprises and things along that line, So I could totally see my company, who primarily to date has been focused on web applications and setting up marketing platforms and stuff for some of these organizations, also providing significant back-end development with blockchain-based solutions as part of a suite of services that we're offering to our clients. as qualified healthcare technology providers. You know what I mean? So that just becomes another tool in our toolbox and helps us, you know, keep more of the cash in house that they might have sent somewhere else. So believe me when I say I'm 100% on the utility side. The currency side is just fun.
Amen. And as somebody that has an entire family in medicine, which is why I'm such a science nerd in the first place, I know intimately well how fucked the financial side of medicine has been for decades. And it's ripe for a disrupt. And this is a great tech to get in there and completely revolutionize the way people pay for basic healthcare in a system as messed up as ours. So, so like anybody that's focused on building better solutions and not focused on the churn in the market of the candlesticks, yay, green candles, that's actually really the better long road to be standing on. You know, the other one's the short, exciting road with a lot of risk. And go ahead, throw some cash in, throw $50, high five on your new ether, you know. But, like, I'm not going to stop you. I've had great luck there, but that's not what kept me interested. That's what kept me interested, was that I understood that this technology could fundamentally change systems and allow for things that weren't possible any other way. And so, as if you're already a developer and you've already run development teams, your head is already really well primed to think through some of that stuff. And just don't try to learn all the market speak. You don't need to. You can, and you can make money that way, but to go with what you've already got, because it'll really help you in this space.
Just spend less on it than you would spend on DLC from your favorite game. All right, we are at 5:15, so I'm going to go ahead and wind it down. Do we have any other noob questions we want to get answered before we call it a day? I'll let you buy a ton of the Chris token. How's that?
Chris coin.
Chris coin. It's coming up soon. Jinx.
Chris coin for the win.
That's what it'll be.
It's good hanging with you guys.
Beautiful.
Yeah,
All
thank you guys so much.
We'll
Have an awesome Saturday.
Hope to see you all again next week.
Great.
Yep.